Hello, everyone. Matt Clark, research analyst for Money and Markets with your Money and Markets week ahead, what to watch on Wall Street. It's going to be a relatively short week on Wall Street this week, obviously. The market does close at 1 o'clock in the afternoon Eastern time on Thursday for Christmas Eve and will remain closed on Friday for Christmas Day. Markets will reopen for normal operations on the following Monday. Here's some things that investors should be watching out for on Wall Street this week. Despite entering a short trading week, there is one initial public offering on the schedule for the week of Christmas. It's a relatively unknown one because there's just not a lot of information out there about it. But on Tuesday, Dutch biopharmaceutical company Pharming Group NV will launch a secondary IPO. It'll trade on the Nasdaq's global exchange under the ticker PHAR. Now, the company is, again, like I said, a global biopharma company that specializes in developing protein replacement therapies for rare diseases. And that is about as complicated as it actually sounds. It does have a flagship product called Ruconest. It's a plasma-free NHC1NH protein replacement therapy. Don't ask. Its primary function, basically, is to combat rare genetic conditions, especially one known as hereditary angioedema, which can cause swelling in the hands, the feet, the abdomen, the face, and airways. It's a drug that's distributed in the U.S., Israel, South Korea, the European Union, Norway, Iceland, and Liechtenstein. Now, in terms of the company's financials, for the first 9 months of 2020, Pharming Group reported a 9.2% increase in its revenues from $151.2 million in the same period in 2019 to $165 million in 2020. Its gross profit increased by 12%, while its operating profit was about 19.7% higher than the same period a year ago. Pharming Group's quarter-over-quarter revenues were up 17.3% compared to the second quarter of 2020, and the company's revenues in the United States went up 8% year on year. Now, there's not a lot known about this IPO. It is, again, a secondary IPO offering. It does trade on the pink sheets, but Pharming Group does plan to offer around 899,000 shares at a price of about $12.10 per share. Now, right now, its pink sheet trading is about $1.21, so you can do the math and see kind of where all that comes into play. And that's all according to its F1 filing with the Securities and Exchange Commission. That puts the offer amount at about $10.8 million. Now, interestingly enough, they don't plan on really raising any capital by this offering. What they're doing is they're basically just selling shares, bringing in money. It does raise capital per se, but they don't really have a use for that capital outside of just operating expenses. Now, this is a good time for IPOs. We've talked about this before. Investors seem to have a big interest in new companies coming to the market. The Renaissance IPO ETF trades on the New York Stock Exchange under IPO, which is an exchange-traded fund that tracks IPOs, is up about 83% in 2020 compared to the S&P 500 index, which has gained only about 12 to 13% as of right now. Pharming Group's secondary IPO will actually be the fourth biotech biopharma IPO listed on the market in the last 2 weeks. So a lot of companies are coming to market. This is a relatively small one and probably not one I would pay too much attention to, as it is just a secondary offering at such a low amount. If you wanted to get into it, it's fine. But again, in terms of large IPOs, we've seen much bigger. We've seen much of those with much more impact. Now, as I've said, it's going to be a slow week in terms of everything on the market, and earnings is no exception with the Christmas holiday coming up this week. Only a handful of companies plan to report this week, but I do want to focus on one company that does provide human resources, payroll benefits, and insurance management software to small and medium-sized businesses. The company's Paychex Incorporated. It trades on the NASDAQ under the ticker PAYX. It's going to report its quarterly earnings on Wednesday. It's actually in its fiscal 2021 year, so don't be necessarily bogged down by that. It's still a quarterly report. It's just, I think, it's second quarter for 2021. The company started the year off strong with, and by year I mean the calendar year. Its quarterly earnings in the traditional first quarter of 2020 were 97 cents per share on revenue of $1.14 billion. However, that revenue fell off a bit over the last 2 quarters. As you can see in the chart I'm showing you here, a revenue for the traditional second quarter dipped to about $915 million. It did jump a little bit to $932 million in the last quarter. Now, the company has a good track record of beating Wall Street expectations. It's beaten an analyst in 9 of the last 10 quarters in terms of earnings. It's also beaten or met revenue expectations in all 10 of the last quarters. Now, its stock price has moved steadily upward since falling to new lows in March of 2020. The chart here shows that Paycheck stock has moved about 93.3% higher off those March lows. The stock price is very close to its 52-week high of nearly $95 a share. Now, in its most recent quarterly report, the company projected fiscal year revenues to decline by 2 to 4%. Their fiscal year actually ends in May of 2021, so a decline of 2 to 4% in revenue. And they also projected diluted earnings per share to fall by 6 to 8%. Now, for the current quarter, Wall Street analysts are projecting earnings per share of around 66 cents per share on revenue of around $927 million. I suspect Paycheck's earnings will be kind of right in line with analyst expectations this time around. There could be a slight variation of a penny here or there, but it's going to be relatively close. And I don't really see a huge impact of the company's share price tied to this next earnings report coming out this week. I'll tell you more about other earnings this week here in just a bit. Now, in terms of our data dump, the Federal Reserve Bank of Chicago will present its monthly activity report for the 7th Federal District on Monday. The district comprises of Indiana, Iowa, Illinois, Michigan, and Wisconsin. This report is a key component in tracking overall economic growth or decline across the country. Now, in October, the index was 0.83. That's not a percentage or a dollar amount. That's just kind of an index number. It's a marked improvement from September's reading of 0.27. It indicated a little bit more bullish or positive outlook for the dollar overall. October was also a marked improvement from May's negative 17.5 reading, but considerably lower than July's reading of 5.3. Now, also, the Commerce Department's going to reveal real consumer spending figures on Tuesday. Quarterly spending jumped more than 40% in each of the last 2 quarters after suffering 30% declines in both August and September. October and November spending increases were the largest jumps since December of 2015. But you have to put that into context considering where spending was earlier this year. So a 40% jump may not necessarily seem all that strong compared to jumps back in 2014, 2015. The National Association of Realtors will also release its month-over-month existing home sales report on Tuesday. In October, existing home sales jumped 4.3% on a month-over-month basis, beating analyst expectations of minus 1.2%. However, analysts are holding to a drop for the month of November, forecasting a 1.2% decline in the sales of existing homes. Finally, on Wednesday, the Bureau of Economic Analysis will release its month-over-month personal income report for the month of November. The report shows the change in total value of income reported by consumers. Now, as you know, a lot of Americans have been negatively impacted by the coronavirus with layoffs and furloughs, and with no stimulus, no direct payment stimulus in the works as of right now. That is only projected to probably get worse over the coming months. Personal income did drop 0.7% during the month of October, and analysts are projecting a 0.3% drop for the month of November. Now, to finish off our week ahead, here's a look at some of the key earnings reports that are coming out this week. HEICO Corporation trades on the New York Stock Exchange under HEI. Ennis Incorporated and Vince Holding Corporation will all report their earnings on Monday. On Tuesday, CarMax, a popular used car sales company, will report along with Albertsons Companies, which is a popular grocery store chain. On Wednesday, we talked about Paychex Incorporated. They will report on Wednesday. Thursday, Eaton Vance National will report its earnings. And Friday, the markets are closed for Christmas. There are a few subsidiary reports due out on Christmas Day, but nothing of any significance or consequence. So that's really all for this week. Again, the markets will close early on Christmas Eve at 1 o'clock Eastern, and they will remain closed on Christmas Day, reopening to regular operations on Monday. So that is your look at our week ahead. And really, from all of us here at Money and Markets to all of you, we wish you all a very happy holiday and look forward to a much more prosperous 2021. Until next time, everyone, this is Matt Clark, research analyst for Money and Markets, your host of the Bull and the Bear and the Marijuana Market Update, wishing you all safe trading.